afternoon, everybody. Welcome to the TraderMerlin Show. It is your Thursday afternoon edition, a relief rally that many of us have been waiting for. I actually thought we'd see more of the proverbial dead cat bounce and get some nice little bear trap action going on, and lo and behold, we had some nice moves out there today. So I'm going to dive into a lot of that, and I'm also going to get into a whole bunch of user questions. User questions. Why did I say users? You're not users. You're participants. You're attendees. I don't know. Anyway, I have a bunch of questions I need to get to, so I will do my best to get to all those on today's session. Of course, if you have some, send them on in. You can just type into the chat there if you're watching live, as usual. And good to see you, Vernon, Terry, Lori, Chuck. We got Joe, Naum, Tom, and Mimi as well. Les, Thomasina, Alan. Good to have the group with us. And there was a question from Judy Wang, I'm hoping is here today since I didn't get a chance to answer on yesterday's show. But let me start off, not doing the Q&A yet. Let's start off with just an overall what happened in our markets out there today. Some good stuff, actually some nice levels forming as well. So here is what we'll start things off with, the weakest part of things, which is Bitcoin, cryptocurrency. Surprising looking rather ugly today. If you guys see my screener here, I'm just going to scroll down so you can see what's going on in the crypto space. You just see lots of red, and some of the red is massive. I mean, you're getting into the double digits down here on things like Elrond or Loopring and Celsius, it's on 12%. Just some really ugly days, and it's kind of strange considering that the rest of the market wasn't that bad. At least the other markets weren't that bad. So Bitcoin down 0.49%. The good news for those of us who are long Bitcoin, it is just sideways. We've had 2 weeks of pretty much sideways. Granted, we had this really big drop down back on the 12th of May. We had a long bottoming tail today on Bitcoin as we fell to a low price of 27,890. But all in all, I'm okay with this. I'm okay going sideways as long as it doesn't keep trending down, which is what I anticipated doing. So any sort of sideways action or basing is good for me, especially for Bitcoin. Now, moving up the ladder, going to commodities. You had some, at least some wider ranges over the past few days for commodities. Here is your chart of gold. Yesterday was a pretty ugly down day. Today, you actually had a continuation of that for a little bit, but recouped some of those losses and actually brought us back near the highs of the day for gold futures, showing a gain on the day of 0.14%. Silver, we'll bring up SLV just for fun. 3 consecutive green candles, yet seems to go lower every day. Kind of an interesting conundrum there with those 3 green candles. Let's go to the indexes. Start things off with the Dow Jones Industrial Average, which for those of you who trade the Dow, probably loving the fact we came right up smack into an area of overhead supply we established back around the 17th and 18th of May. As you can see, that long topping tail today, 1.46% is where we stand right now for the Dow. Futures, 32,540 is our exact number. So all in all, fairly decent. Let me get rid of some of these lines here because we don't need that one anymore. Right now, we are plugged smack right to the T almost to those highs we established, again, back on the 17th and 18th of May. Moving up the ladder to the S&P 500, which had a nice gain of 1.85%. It also is attempting to get back up to those levels. I'll put a horizontal line here just so we can see what that number might be, and it is, I'm going to call it 4,100. Is the kind of the level I'm looking at this to rally back up to, which would only be another 49 points from here. On the day, the S&P moved up 74 points or 1.87%. So all in all, a great day. I kind of am feeling you'll see some move back up, continuing on that rally going into tomorrow, and probably stop around 4,100, where I will be looking to maybe buy some more, build a put position since I am out of my puts right now, and happy I am because we got this rally, but hopefully I'll be able to buy back in and capitalize on the next leg down. All right, let's see. Russell 2000, the RTY, up 2.13%. It also came right in that same level that the Dow did, although this looks a little bit better. Some of you who are technical analysis geeks like myself may look at this and go, ooh, this kind of looks like a cup and handle formation. All right, you've got this sell-off that's really from May 6th all the way down to May 12th was nothing but down, came back up, and now a smaller or a lower right-hand depression here, so some might call that a cup and handle. Either way, it looks actually relatively positive for the Russell 2000, which I'm sure would be great for a lot of you who are long. NASDAQ was your big gainer, 2.66% is where we stand right now, although still not near those highs that we established back on the same day that the Dow and the S&P bounced into, which is right around, let's call it 12,600. We are roughly 240 points away from that level, which it could hit tomorrow if it gets some nice momentum, but I wouldn't count on that one. And finally, your last one for the day, at least from the initial analysis here, is crude oil. You notice the CL chart, continuous contract, looking much better. It's back up to those highs, which of course, if I move this line down or create a new one, you're kind of smacking your head into that same area of overhead supply. And as we know, kind of the laws of supply and demand state that the more it hits its head on something, the more likely it's going to break through. Well, this would now be officially the third time it's come back up to that 115 mark on crude oil. So if you're bullish and long on crude oil, feeling a little bit optimistic here. If we get a close above, let's say 116, then you'll probably start moving back up and challenging those highs. So looking good. We're making higher highs, higher lows. It actually looks somewhat like an ascending triangle here for light crude. All right, well, let me see real quick because before I dive into the open Q&A, we'll do what I see here. Let's see. Are you still holding 1,800 Ethereum? I wish. I have 65 Ethereum. Unfortunately, I wish I had. You mean 1,800 price? Or 1,800 actual physical Ethereum, or the actual price of ETH? So let me just go and bring up the Ethereum chart here, which has been pretty darn ugly as well. Again, I think there's a lot of speculation about what's going on with the merge, which should happen in August, but this chart is just absolutely brutal. You're down over 50% just since April alone. Luckily it is double tapped kind of this 1733 line that I have on the chart here. That's been there for quite some time, but you'll notice it's been here many times, right? It kind of established this level back in 2021. We'll call that May of 2021, so exactly a year ago. Then we hit it in June of 2021 multiple times. We hit it again in July, and now we've bounced off it twice. So again, more times we keep hitting this, the more likely it's going to break down and move even lower. So not the best looking chart here for Ethereum. Of course, mine is my horizon is much, much longer. What do you think of the daily supply zones and SPY and QQQ? Well, I guess it all depends on where you draw your supply zones. But I mean, I have areas where I'm looking, all kinds of weird. Let me see if I can get rid of some of these lines. I have areas that I'm looking for it to potentially have difficulty getting above. Certainly that one that we're coming into right now, that's my first objective. And then my second objective is going to be right in here. I've got snap mode on, so it's kind of creating a weird chart, but I'm looking at those two overhead yellow boxes as kind of where my next two targets are. Of course, you're right into one today. If we get a close above that for tomorrow's session, that obviously would be great for the S&P and the potential that we could go even higher and get up to that 4,300 mark on the S&P 500. As far as QQQ, it was a oops, not 4 Qs. We're not 4 anymore. How about 3? There we go. Similar picture, right? I'm still just looking for the rally back up to this little blip that you see here. And I guess I could leave this one. And I guess long term, you could argue that that would be potentially one, although I wouldn't draw the zone that way. It'd be a little bit tighter in, and I'd refine down to a smaller time frame. But I'm also thinking that you'll get back up into this level right around here, which would be on the QQQs right around 330. So those are kind of the next 3 stopping points I have for the market going forward, at least for the NASDAQ 100 going forward. And, I've got a couple small long positions on QQQ, surprisingly. So some calls against those. And ultimately, if we get up to 330, I'll reverse those and go short and make some, hopefully, more profits on the downside on the next leg. Let's see, what else do I got? Is it me, or is profitable trading mostly the art of waiting for good setups? I think I have to agree with you on that one. I mean, trading overall stems and it falls into 2 buckets, and patience is the one that I don't think most people understand. It's probably the most critical. Other than risk management, I would say patience and waiting for something to come to you is probably the most important piece. Most people that I've experienced on the trading floor, they're forcing trades, they're rushing, trying to get in early, making sure they're not wasting their time by just sitting there. Let's put a trade on. And usually those end up being losers. The best performing ones are the ones that fit all the criteria, but you have to wait for, right? Good things come to those who wait. Oh, the cliches, we could rain down on that one. The bottom line is, patience is critical. I think personally the single greatest thing to help people in your trading is risk management. It's not having a great strategy. It's not using tools or indicators. It's simply manage your risk. If you can manage your risk and not take huge losses, then you can sustain a long string of small losers and have one winner to erase all of it. Erase all those losses. Let's see. I need to learn options next. Futures trading for the time being. Yeah, personally, I think options are probably the most versatile, powerful asset class out there. They're awesome. I love options. I'm just not as well-versed. Not as well-versed. I understand them. I just don't do all the different strategies that a lot of people do. I keep it relatively simple. All right, let's go into my Q&A so I can at least get through these. I will have to finish a little bit earlier than normal. I am doing an interview at 3 o'clock today for someone else's channel and podcast, so I thought, hey, why not? Maybe I can get spread the word of the Trader Merlin show and give some people some formal education in financial markets on another venue. So here is what I want to talk about for today. First, let's talk about economic announcements and earnings. You notice here, lots of green. Everything on this screen except Medtronic beat earnings today, and some of them are huge beats. Ulta had blowout earnings, beat by 41%. You had Baidu, 132% beat on their earnings. Alibaba beat by 18%, and a lot of big up moves. I'm kind of kicking myself, and trading is so much of should've, could've, would've. But I mean, how many times have we talked about Alibaba and Baidu, specifically for me personally, Alibaba, and I kept thinking to myself, I should buy some Alibaba. Long term, I am definitely a fan of Alibaba. It's where I'm getting all my bikes from, but you had this chart which is just ugly and just nothing but down. Well, I kind of been waiting for it to make some new highs, and we might get that new high being put in tomorrow. It's up right now 14% on the day because of their earnings numbers. Of course, as you guys saw there, they surprised by about 18%. And unfortunately, I did not jump on this one. Kind of kicking myself. Baidu, I'm not as big of a fan of, but here's your Baidu chart for the day. It was up 14% as well. And the longer term picture here has been equally as ugly for Baidu. So great days for anybody holding Baidu and Alibaba. One that really blew my mind was Macy's. I just don't get how Macy's can do so well. 19% gain today, 19.31% up to 22.92. They had huge earnings beat as well. You had the list goes on and on and on about who's beating earnings. Now, you wanted to see where Costco was. Okay, sorry, Costco down. Costco's one of the few in the after hours, down 2.2%. 2.15%, but on the day it was up 5.6. So it was having that nice surge with all the retailers. Look at XLY. I sold puts on XLY a few days ago, as you guys know, and thank goodness it is just ripping over the past 2 sessions. But XLY is consumer discretionary, which is your Amazon and Nike, things like that, things that we want but don't necessarily need. Nice rally up there in those, but Costco was one that I was kind of expecting them to not be as bad as Walmart and Target. Now, the actual numbers that you see here, Costco actually beat earnings by 5.67%, yet they were down, when I took this image, 1.03%. Now they're down 2.15% on the day. So there's your Costco. Hopefully, doesn't get crushed. Lisa and Laura, yes. Simple options. Gee, I wonder which of the 2 ladies in the room teach simple options or have a mastermind community clubhouse room talking about simple options. If you are in a mastermind, get in there. Check them out. Fun, simple, easy options. All right, and let's go to economic calendar because I don't know. Let me just ask you, if you are in the markets, you're obviously listening to economic announcements and following what's going on, or at least you should be. And would you say that and forget about external stuff, right? Obviously what's going on in Texas and et cetera is absolutely horrible, but that's not a trading thing. From an economic news for financial markets, would you say that the news today was good or was it bad, right? You just kind of had a blanket idea, was it good or bad? You look at a market like today, and I think that the natural instinct is to look at it and make, man, we had good news out there, right? I mean, you had nice big market up moves today. Great. Why would there be bad news? We had a big positive move. Well, check out this economic announcement. This was really ugly. It was bad news. So here is your your GDP numbers, preliminary. Remember, preliminary is one of the first readings of it. Previous number, month over month or quarter over quarter, was negative 1.4%. They expected a negative 1.3. We came out worse. They thought GDP would be getting slightly better. It actually got worse, negative 1.5, which would put your second quarter of negative GDP growth, which technically puts you in a recession according to a lot of economists. However, it gets even worse, especially here. When I look at pending home sales, they were expecting pending home sales to drop from 1.6% to 1.9%. It dropped 3.9%. And again, I've been waving the flag that if you keep raising those 10 years, the 10-year bond rate, your 30-year fixed rate is going to start to spike, and I think you're going to start to see people priced out of the market. So I think that's having an effect on pending home sales. I have not looked at the macro numbers for housing across the U.S., but we'll get some of that in the next week. We have some more housing data, but we had new home sales really bad. Pending home sales not looking good. And again, 14 to 15% of GDP is from real estate. If this starts to crash, folks, this is definitely not good for the equity markets going forward. But don't worry, we'll have ourselves a nice little daily market rally for the S&P today, which always is surprising. You know, it's bizarre the way these markets work. They do what most people least expect. I saw that economic data this morning and I was like, oh boy, this is probably going to have a negative impact on the markets, and it did not at all. Everything gets crushed next week. Shorts are in our. I agree, Michael, and I'm hoping, fingers crossed. I know hope is the most vile, disgusting four-letter word you can use in trading. So, and I hate using the word hope. I'm anticipating a rally tomorrow so that I can buy some more puts. And if I get a nice rally tomorrow, I'll build a good-sized put position. And if it continues to rally up next week, I'll buy some more puts because I think the next leg's coming, especially when you look at this economic data, the GDP, the housing data. It doesn't look really good. And yes, Lisa, PCE price index is tomorrow, which is the Fed's go-to for inflation. That'll really create some waves. So I'm curious to see how that all pans out. Should be a fun day tomorrow's trading. All right, let's go to listener questions. So I am obviously going into the questions that you guys have sent in the chat. That's going priority. And then I'm going to go to the ones that were sent in on YouTube. I'll start there because Les is here, and he sent this one in a couple days ago. He says, what exactly happens on month-end rebalancing? Do funds just dump losers or buy the high flyers to tell their clients that they own the outperformers? Does there tend to be more buying than selling? Does it vary because of the trend of the markets? It varies because of the trend of the markets, Les. And it all depends on the fund itself. So if I have a fund, let's say I've got a broad market mutual fund. And in that prospectus, it really is all about what the prospectus is. What are the rules? Remember, the prospectus is the guidelines, the rails, if you will, for a mutual fund or any fund. And if in my prospectus I say I have to be 25% large cap, 25% gold, 25% international markets, and 25% bonds. All right, I'm doing 4 broad categories: large cap, international, bonds, and gold, right? Just keep it there. If at the end of that month, let's say the equity markets have performed astoundingly well, and I look at that portfolio and I have defined in my prospectus, my allocation needs to be 25%. But if equities have moved up so well, and let's say gold and international stocks have dropped, then all of a sudden my portfolio could be 30 or 40% stocks. So what I'll have to do is I have to sell out a proportion of that portfolio to get my allocation to equities back to 25%. And now, because the price of gold may have fallen, now it might only represent 15% of that portfolio. So what am I going to do? I'm selling the equity portion to get that to 25%, and then I'm going to be buying gold to bring that up to 25%. And it's an interesting concept because essentially what you're looking at with this rebalancing method is you're locking in winners by selling the winning ones, right, to get it back to even. But you're also dollar cost averaging on things that are sliding with the anticipation that it's going to rally up someday. So, Les, that was your answer there. Hopefully I got that all mapped out. It's fairly simple. You know, this is something that in the strategic investor course is a big focus. Like, I think minimum one time a year, you should look at it and say, I'm going to rebalance my portfolio. And maybe that happens in December. Now, this is very different than, window dressing, where a lot of times they will sell a lot of their losers and, buy real quickly some of the big winning stocks. So it looks like they've been holding big positions and big winners. But as far as end of month or month-end rebalancing, generally that's just reallocating capital so that the predefined allocations in your portfolio remain at those balances or percentages that were defined earlier. Hopefully that helped out there, Les. Let's see. Only XLY. Did it complete a 7-wave countdown for Elliott Wave? Oh, I'm not an Elliott Wave person. Market going to be a big red day tomorrow and close on Monday. Yep, true. Institutions not holding over the long weekend. I kind of agree with you there, Ron. Typically, especially with the volatility we've had, I'm kind of expecting there to be a follow-through rally. I feel like there's some real optimism. I think a lot of people were shocked by today's numbers. Plus, you had a lot of great earnings after hours. But definitely weakness near the end. I mean, I personally wouldn't want to be carrying positions into the end, but I'll be hopefully adding some puts to my portfolio for tomorrow. When does this rotation happen? Is it the end of each month or each quarter? It depends on the firm, Chris. There's no set rule on it. Generally, what you get for most funds is they're not tied to those specific allocations on a monthly basis. Some are, but generally, what happens at the end of the year, you get your big reallocations, and that's usually selling those losers so you can take those losses. But that's it's not really quite rebalancing. That's just window dressing and cleaning out the portfolio. Ron, you're awfully optimistic on that down day tomorrow. Let's see. It's going to be real interesting when supply rises due to people moving during the summer and buyers not buying due to high prices. Well, let me real quickly jump questions here. And this goes back to KF. I think that the housing numbers that we've seen, you can kind of see those already. Yesterday or a couple days ago, we had home builders come out with really bad earnings. Well, you can kind of see that's reflected on this price chart here. You have companies like Simon Property Group, which were doing great during the pandemic. Surprisingly, no one was shopping, so I don't know how SPG would be doing great. But, it's been tanking ever since November. Just nothing but down Periscope. And same thing for KB Home. So I think that the data is suggesting that the housing market has turned. And, you look at housing prices, they're still looking really good, right? You still have housing prices surging, you have 19% year-over-year growth. However, talk to anybody in real estate. I know we have some people here who are in real estate. That is an outlier by a good margin to have 20% year-over-year growth in housing prices. Can it sustain itself for a little while? Sure, absolutely. But can it tank? Should it go back to its normal, which is, 6, 7, maybe 8%? Sure, absolutely. So, you have to, I don't know. To me, when you have something that has such a big run, you need to start anticipating that market correction or sell-off, and I think that's what we're going to see with real estate. Now, to go to KF's question, he says, do you think now is a good time to buy a house or an apartment in Orange County? The answer very quickly and very easily for me is no. I do not think now is a good time to buy. I think not only are prices beyond inflated, but you also are now getting much higher rates for your mortgages. What are your thoughts on buying now in the U.S. overall? I think like anything that there's going to be pockets of America where real estate is probably going to be a great value. Obviously long term, are you going to go wrong buying houses in Southern California? Probably not. But you're thinking long term. People always want to go near the ocean. No matter if you think California's all politically screwed up or not, doesn't make a difference. People always want to be near the water. So I think you'll have that as part of a saving grace. But, places like Las Vegas have been performing incredibly well. And I think there's some markets that are a little bit overinflated. Now, to the second part of this question, which was, do you think that there is a high probability for the U.S. to see a Great Depression, have a housing market crash 40 to 50% in the near future? Is it possible? Sure. What measurement of probability? Are we saying 60%? I don't think so. Do I think that the housing market could drop 30% from here? That's kind of my number in my head, is 30%. I think you probably see things contract significantly. But remember, that's not just because of real estate. That's this kind of perfect storm of right now most people have money built into their retirement accounts, and they've been investing since 2009, and you have huge profits, paper profits. So once you start to pull some of that money out, that pushes the equity markets down. Then what are you going to do with that capital? A lot of people are just going to hold on as everything completely crashes in the equity market. So I think the housing market's gone up a little bit too far too fast. I think that was spurred by having rates that were under 3% for 30-year fixed-rate mortgages. I think once you start to get those spikes in bonds, that the housing market's going to suffer. And natural ebb and flow of things says there's going to be an impulse and a corrective phase. We haven't had a corrective phase in real estate in quite some time. So I'm anticipating there being a drop. 30% I think would be acceptable. You start to get near 50%, that would be a pretty painful thing for most people. But Is it possible? Absolutely. I personally, and again, you have to make your own decision on whether you want to buy or not, KF and others. But for me, I'm not looking to buy a place right now. If I did anything, I'd actually sell my home into this momentum, right? You sell when everybody wants to buy something and prices are, or overpaying for the value of whatever it is that you're selling, whether it's stock or your home. I think now as a seller is a phenomenal time to be selling. The challenge is once I sell, I got to go live somewhere for a year or two until I can buy back in. But, and as far as OTA goes, there used to be OTA real estate. I'm not sure what happened there. I know with the FTC, a whole bunch of things happened, but the people that there were a few that I really liked from that. Jason Tom, who I had the opportunity to work with to do a bunch of real estate videos with, he was awesome. Zany Pattison, just phenomenal guy. He was kind of one of the founding fathers of OTA real estate, and Diana Hill is another. But I don't think that there's anything really that I can point you to where you could go watch videos or newsletters from them. So unfortunately, as far as my real estate knowledge goes, it's just me watching the markets and looking, maybe talking to my dad about residential real estate, but that's pretty much it. I'm too old. I agree, Lori. It is not. I don't agree that you're too old to move. It's me. I look at how much stuff I have. I'm like, I don't want to deal with all that stuff. So my challenge would be selling all my stuff and figuring how to move. I really don't want to move. Margaret, can you watch your interview? I don't know when it's going to happen. I think what this individual is going to do is it's going to be pre-recorded. So we're going to do about an hour session here in a little bit, and then I will let you know where that interview is posted. So you're more than happy to check that one out for sure. You can give me the thumbs down on my interview skills. It's weird to be on the other side of the interview thing, I will say. Bose, in my house, price mid-range of comps has been on the market for 21 days now in Phoenix. It's 21 days. Normally 21 days is not that big of a deal, but in this market, 21 days seems like a long time. Right? I mean, hell, there's houses that had a for sale sign in my neighborhood, and then next day the sign's gone. It's like, what? Yes, Margaret. It's funny. My mother was she was a pack rat. We had this 20-foot by 60-foot barn where I lived in Northern California, and she just completely packed that thing. And when she passed away, that was a good lesson for me to not be as much of a pack rat. But I like to have stuff because I'm a firm believer that the second you throw something away, I had a wine opener that I thought I had multiple wine openers, and I remember taking this down to the Goodwill. I'm like, I don't need this wine opener. And literally when I got back from the Goodwill, I'm like, have a glass of wine. It's like, oh shit, I gave away my last wine opener? Are you kidding? So I had to go buy a brand new one. I don't like throwing stuff away. Anyway, KF, hopefully I answered that one. I personally don't think now is the time to be buying real estate, but that's just my personal opinion. As long as, here's the thing with real estate. If you are thinking I'm going to buy a piece of real estate, great, awesome. A, what's your time horizon? B, can you make those payments? So if you do the math and you know that you can make those payments and you plan on staying there for a long time, then if it's a house you love, then buy it, right? But you have to question your ability to make those payments, because if we do go into an economic slide and maybe you get laid off or something happens to your employment, or heaven forbid you get injured or something, now it's a question of, can you make those payments? And that, to me, that's one of the biggest things with real estate, is saying I always have to be able to make those payments. And if I don't, I could lose my home. So if you feel you'll be struggling to make the payments with our current mortgage rates and paying an inflated price, I would say just wait. Hey, Chris, good to see you. Nanu. All right, let me see. And so here's a question that came in as well. Merlin, you said that you closed out your QID position. So as you guys know, QID is double short. Why did you use QID rather than SQQQ? Is it the price of QID being about 40% of SQQQ, or other reasons? The primary reason, Michael, is I just don't really like triple leverage ETFs. I know it's silly. It's just a personal thing for me. QID, I guess I have this, what do you call it when it's just kind of embedded in your memory? But back in 2008, when I was on CNBC and got kicked off of CNBC for saying the markets are going to crash in a big way, I was putting my money where my mouth was by buying QID and SDS. So I was in the double shorts of the NASDAQ and the S&P as we broke 1260 on the S&P, and from there the markets fell 50%. Now I did not ride it all the way down 50%, but those vehicles in my mind, QID and SDS, perform so well that I have an affinity to them. So that's part of it. I'm just comfortable with QID and SDS, which are double shorts. but I just don't really use the triples. And I could have used the triples, but it has nothing to do with price. Price didn't make any difference to me. It was just I went into QID, simple and easy. Houston, Texas, next door to me, been 6 weeks. 6 weeks seems like a long time. That seems like a long time. All right, last one here, and then I'm going to start to wrap things up and go to your economic calendar for tomorrow. Jeremy says, is there something similar to bar charts for mutual funds to be able to do research into what they are holding? My wife's retirement only allows mutual funds, but it is self-directed, so I'm able to have a much larger selection. Thanks, and great show as always. So, first off, the analysis is going to be different technically because, as you guys may know or may not know, mutual funds do not trade during irregular market hours, right? So as we get this open, high, low, close, 4 main variables of activity over the course of a trading day, mutual funds don't do that. They trade off what's called NAV, which is net asset value, and that is literally, it's quoted at one time at the end of the day. So when the markets close, they do a net asset value, and that's the price. So the charts look very different. Unfortunately, TradingView will not let you bring up charts of mutual funds. TradeStation used to. I haven't looked at it in a while, but let me see if I can show you. Go to barchart.com. So real quickly, let me go to bar chart here and add that one. Bar chart. Oops. All right, so here's barchart.com, and let me just go let's see, CCPX. So here's the PIMCO small fund class 1A. When you go here, generally what you'll see is just these basic charts, right? You don't get a lot of great chart analysis for mutual funds, but remember, there is no open, high, low, or close. This is just one price tracked per day, so you really can't get candlesticks. It'll just be a dash. That makes the technical analysis side a little bit tricky. Now, for most mutual funds, you'd have to go to the fund family and download the prospectus. That's really the way to get it. So, here we were looking at barchart.com where you could click on the components. Well, you can't really get that here. There is no constituents page. So what you would do is you'd have to go to PIMCO and look up their specific fund. Let me see if I can do this. All right, let's click Control C. I'll go over here. I will paste that, and I'm going to type in prospectus. I think I spelled prospectus wrong. All right, there's PIMCO. And there's some of your equity funds. Welcome to PIMCO. Leave me alone. Individual investor. Okay, just leave me alone. All right, so let me see if I can find some mutual funds because these are all mutual funds right here. Let's go to the PSCSX, right? So you view the fund, and generally they will go and give you a rundown of what's in there through their prospectus that you probably have to download. Let me real quickly see here. What's it invested in? So it tells you what it's invested in, but it doesn't give me all the components. You'd have to download their prospectus. So in the prospectus, they're required to show the holdings, and that's the only really way to get that. One thing to keep in mind here when you look at the prospectus for them, these are generally late, right? So they have to file quarterly their documentation. I'm trying to see if they have a portfolio allocation anywhere in here. Prices and performance. So they're not going to disclose that here, but they do have to document that. So you could download the, here's the full prospectus, regulatory docs. Let's see if I can get that from here. Oh, I don't have Adobe Reader on here. But that's how you'd have to do it, Jeremy, is you'd have to go to the specific sites and download the prospectus. Just remember, that information that's in that prospectus could be 3 months old. So it's not necessarily current information. It's going to be late. Lori says, that's what I hate about mutual funds yep. And if anybody has something that's self-directed, and Jeremy, I believe that you actually talked about your wife's retirement being self-directed. If it's self-directed, then go to ETFs. If it's self-directed, you do not have to stay in mutual funds. And really, the only reason you should be in a mutual fund is if you literally have no other choice, right? If you are forced to because of a 401k, fine. But if you can self-direct, there's no reason to buy the PIMCO S&P 500 fund. Just buy SPY. ETFs are way cheaper with regards to fees and structure, and you can get out whenever you want during the trading day. Mutual funds, you cannot. So let's say market opens and in the opening hour drops 5%. You're like, I want out, and you hit the sell button. And by the end of the day, the market's down 30%. Well, what price do you think you're getting out of a mutual fund? Whatever that end of day value is. So that full 30% drop, even though you said sell in the opening 10 minutes of the day, it's going to get executed at the end of the day. Mutual funds suck. They have a scam, in my opinion, on the American people. Let's see, last one. This was kind of interesting. I'm not a big practitioner of these, but Brian asked, he says, just wondering what your view of Heikin Ashi candles are and how easy it is to incorporate them into a supply and demand trading strategy. I would imagine it would be more difficult to identify supply and demand zones due to the way that HA candles are constructed. Yes, absolutely. I do not use them, but there are some people who do. See, the main reason I like candlestick charts, so let's go look at S&P 500. Main reason I like these charts is everybody sees the same picture. So those supply and demand zones start to become a little bit clearer. Well, notice the level I have here right at about 4,100, right? So that's my my level on the S&P futures. If I switch this over to a Heikin Ashi candle, the level's still there, but you notice that the candles are no longer the same. They're very different. And this tells me the story. I like to see where this candle actually opened, closed, and traded. I want to see that we opened up that trading session at the dead high and crashed down, right? This day, right here, where I have my my cursor on May 18th, look how horrific this red candle is. That's fear. That's pain. But when I switch it over to a Heikin Ashi candle, it's completely different. It looks like an indecision day. So I'm really not a fan of them, unfortunately. I know that some people are, and that's okay. I personally don't use them. I don't find the value. Again, I like to look at what everybody else is looking at because part of my job, I know this sounds horrible, is looking at retail investors, identifying their actions, how they're going to react, and hopefully capitalize on that. I mean, that's just the nature of what institutions do, so I want to be doing that as well. I think that our ability to capitalize on novice traders is part of what trading is all about. So novice traders are going to look at the same basic information, which is why that's what I look at. You guys have seen that here on the show. You notice I don't do anything crazy with regards to my technical analysis. I usually remove all grid lines. I put a couple horizontal lines where I think are key points for me, but I don't have really any indicators on here. I don't need to see that stuff, although indicators may help me anticipate where buyers and sellers are starting to line up. So every now and again I will flap those on there, but I have traded and looked at enough charts that I could draw moving averages on this chart fairly close without actually using moving averages. I just know how they're calculated. Same thing with stochastics and Bollinger Bands and those types of things. Let's see. I'll read through a couple here. I've always told my friend to buy SPY instead of his mutual funds, but he always chose finance. Yeah, it's crazy. You what's the old phrase? You can lead a horse to water, but you can't make him drink. A lot of people believe they need a financial advisor, and if you're using a financial advisor and they're putting you in an S&P fund, you may as well just assume that 3 to 4% of your total performance in that portfolio is literally just being given to that firm and that individual. So why bother doing that? If you plan on buying the markets, you find your cheapest cost for the market. I look at this the same way I go shopping. If I'm trying to buy a can of Coca-Cola, do I want to go to a store that charges me $2.50 or the vending machine down the street that's got it for $1? And I want to support the grocery store. No, you don't. You want a can of Coca-Cola. The can of Coke is a can of Coke is a can of Coke. Find the cheapest one that you can get. With ETFs versus mutual funds, guys, mutual funds have huge amounts of infrastructure and overhead to manage this portfolio of assets to give you a mutual fund. And who's paying that? It's you and me. But if you look at an ETF, it's automated. There's no manual calculations here. It's like, okay, well, I'm just tracking the S&P 500. I might do that with options or basket of securities, but way better, way cheaper. You know why agricultural commodities, corn, wheat, had a nasty gap at the open in the after-hours market? I don't know. No, I don't know. I actually did not look at commodities today. Been too busy with content and getting a bunch of stuff ready. But let's start with corn. That wasn't that bad. I mean, it definitely had a nice gap down here, but nothing that dramatic. There's soybeans taking off today. Wheat. So there's small nibble gaps. I mean, this back here. This one here on wheat that goes from May 13th to 16th. Now that's a massive gap, but I didn't see it. Let's see. I got on my mutual funds when I first joined OTA and started learning more about that. Yep. Good. Well, Lori, I can tell you're not clueless now. You know your stuff. It's good. All right, let me wrap up here so I can get ready for my other interview here in just a second. Earnings calendar for tomorrow. You've got KT. Nobody here knows what KT is. Just thought it was funny. You've got Daimler. Probably not going to report their earnings tomorrow. My guess is they're slated to, but they'll probably report later because they're international. But you got Canopy Growth. So you cannabis stock lovers out there. Canopy Growth reporting earnings. That's going to be before market open. And same thing with Big Lots. Now, as far as cannabis goes, let's take a look at MJ because I probably have Michael here, and I know Michael loves the cannabis stocks. It still looks ugly. I mean, how long, Michael, have we been looking at this saying the trend is down? It can keep going lower. I think the only time where I got really excited was right here. And that's because it started to break its high, or its most recent high. And I was like, oh, here we go. And it was a head fake and ripped back down. And all of a sudden it went from, $16 and here we are under $8. It is brutal. So, I'm looking at what's going on right now with MJ. There is a positive sign. It made a higher low 2 days ago. Just be careful. I think you might want to be looking at levels like this 816 mark. If it gets a close above 8, start to feel a little more optimistic. If it gets above 820, great. If it gets above 850, then I think you start building a position for a reversal. But it hasn't proven itself to really want to reverse. This has been a brutal, brutal downtrend. Oh, my pleasure, Ron. Let's go to economic announcements for tomorrow because this is a big day tomorrow. I'll start at the bottom. You got University of Michigan consumer sentiment and inflation. That's not really that important. But notice the wholesale inventories, right? If we start to see those inventory numbers surge, that's a sign that spending has slowed down. Now, you do have two numbers above that, personal income and spending. The expectation is that spending is going to drop and income is going to remain the same. That would be good for America. It would be definitely good. However, we love to spend. My guess is you'll see spending not drop that much. And income, well, that'll probably stay the same. Now, the big piece is happening at 5:30 in the morning, before 1 hour before the markets open tomorrow, and that is that core PCE price index. They're expecting it to stay at the exact same at 0.3%. Any deviation from this can create seriously wild swings, but the good news is this will be priced in before the markets open. So that'll be a good news for most people out there. If you're trading futures, it'll be wild during those sessions as well. So that's going to do it for me for today. Friday's session is wide open. If you got something you want me to cover for tomorrow, let me know. You can put it down below the YouTube video. That's the easy way. I know we got some new people here. I saw some new names. Hit that subscribe button as well so we can update you when the shows are released, which is every day at 2 o'clock. But I might start doing some self-paced uploaded videos that you can consume at your leisure if I get some time here. Hey, Rob, thank you very much, my friend. I appreciate that. You've been loading up on the old tip jar. I appreciate that. Thank you so much. What was it? Do you watch CAD JPY? No. I can give you some assessment on it, but I don't usually look at cross pairs. But we'll just do CAD JPY anyway. For some reason, my Forex has been almost exclusively staying with the majors. So, you look at what's going on right now with CAD JPY, you have, for all intents and purposes, a bullish flag pattern, right? And most of the time when people look at something like a bullish flag, you have this really strong impulse move. I'm being alerted. My interview is going to be here soon. So, and then you have this kind of downtrend channel. This is actually a really bullish sign. So typically this would be viewed as a bullish thing for CAD JPY or whatever symbol it is. Therefore, kind of waiting for this next move up. If it starts to make if it starts to break some of the highs from this most recent downtrend, then you probably got a pretty good bullish trade going on there with your Canada JPY. There you go. Hopefully that George K. Is that George Kittle? Tell me a San Francisco 49er. The best tight end to play football is watching my show. That would be awesome. All right, that's going to do it. So thank you. Yep, I think that's going to do it for me for today. All right, everybody. Again, if you have comments, questions, you can send them in at TraderMerlin@gmail.com or put them down below the YouTube videos. That's the best way. Hit that subscribe button. I will see you all in tomorrow's session. Take care.